Yeah, just to give you a bit of flavor, you've of course heard of Reuters as the frontline reporting sort of agency. I mean, today you're watching news from Gaza and Israel, and that's, I mean, everything you see on most television channels, be it the BBC or something, that's our camera people on the ground filming it. It sometimes it's not credited Reuters at the very bottom, but it's these are our pictures, and yeah, sometimes we have had very sad days. Just 2 weeks ago, a colleague died from in Lebanon on the frontier. So yeah, it has been difficult times for some of us. Outside kind of war coverage, political news, Reuters is known very well for covering economic stories, political, macroeconomic stories. Commodities and energy is our strength. And why we look so deeply at commodities and energy, because the bulk of our revenue come from oil traders and brokers, etc. So they sit. For those who don't know, I'll just do a little introduction. People who trade oil or gasoline or diesel, they sit in front of two screens, one Bloomberg, one Reuters. They take snappy decision like this very quickly based on what we report, just flashing news on the wire. So to our main subject, when I relocated here in 2010, I thought I knew something about the oil industry because I knew something about Russian oil, and I thought my story will be in the same ways as we're dominating the headlines in Moscow would be dominating the headlines here in London. That would be enough. I arrived, to my big surprise, no one cared. No one cared, honestly. The Russian file constituted probably 7-8% of my time. The rest was OPEC, Saudi Arabia, Nigeria was back then a big story. Some little signs of US oil industry picking up back then. It wasn't a big deal, the US shale oil output, and of course in 2011, 60% of our time was taken by the Libyan revolution. I mean, just to put it in perspective, what Libyan revolution represented, Libya was producing 1.4 million barrels per day out of 90 million barrels per day of consumption at that time. The global consumption was 90, Libya was producing 1.4, Russia produces 10. So 1/10 of global oil output. Yet Libya was enough to move news up and down, etc. Russia was nowhere near the head. No one cared, honestly. No one could care at all about what Russia was producing because news was stable. In 2014, things began to change, of course, because the Crimea was annexed, and then the first wave of strict sanctions came into force. So Russia all of a sudden took like 30% of our attention. Our desk consists of a couple of dozens of people who focus on oil only. So, and then last year, I don't think it will be a surprise to anyone that last year after Russia started.
Could you speak up a little bit, please, or do you have a microphone at all?
I can try my best. Sure. Do I have a mic? No.
I don't believe that. Maybe come down here. It's actually not bad at all.
Okay.
Sorry. Yeah, that might be easier.
And I'll try to speak up. Sure.
Sure. No, sorry.
Absolutely.
It's not bad, Tim.
Sure.
Sorry.
Tony, please sit here. Yeah.
Yes. Excuse me.
So and then, so hardly comes as a surprise that from last year, we essentially 60% of our time we're focusing on Russia because this is what traders care most these days. The level of sanctions that has been imposed on Russia, people tend to call it unprecedented, but it's not true. I mean, Iran is still under much tougher sanctions at the moment. The huge difference between Russian sanctions and Iranian sanctions is that, and I'll speak about this later, are secondary sanctions on Iran, i.e. if you touch Russian oil and you resell it to somebody, even the one who bought it will be liable. So essentially, I'll explain it later. I'll try to, I mean, I know I've been told the audience is diverse, some people know about oil, some people do less, so I'll try to make it kind of interesting for everyone, but please help me if I'm going somewhere where I should be really going or overcomplicating things. So, but I mean, essentially hundreds, if not thousands of sanctions have been imposed on the various parts of the Russian energy industry. And as a result, we've seen unprecedented spikes in energy prices. Oil has approached an all-time high it has seen previously in 2008, so close to $147 per barrel. For gas, it was just crazy. No one has seen prices anything like that. They've reached at some point they've reached $130 per MBTU last year. It's insane. Prices have never been at that level. It was 10 times more than any previous record. So because people were so spooked that prices would that Russia would completely suspend deliveries and there would be no alternative. Funny enough, as always, the world has coped. So the strategy that whoever was predicting that the world will not be able to survive without Russian supply, that was wrong. I mean, the world has always coped with all disruptions. So with that, I'll just probably start this little slideshow to illustrate where we are 20 months later after sort of the sanctions have been imposed and there have been a number of disruptions. So this slide, when the war started back in February, there were all sorts of crazy predictions because no one has seen this coming apart from the CIA. The CIA was the one who was predicting week after week it's coming. No one believed it. Actually turned out to be true. So a few weeks after the start of the war, the IEA, the International Energy Agency, which is essentially the Western energy watchdog, had predicted that the Russian oil export and output will completely collapse because the sanctions are so harsh, no one will be able to buy Russian oil. Now the two graphs illustrate pretty well what happened. I think they are very telling. So essentially everything that Europe was previously buying migrated to Asia. Now some of this stuff has been could have been predicted, but there was a couple of surprises on the way. So this didn't come as a surprise. So China emerged as a huge buyer of Russian oil. They've already been buying quite a lot, but they're buying much more now. Now China has a tendency of buying oil under sanctions because they do not respect sanctions. They say it's US coercion of other countries. We'll buy whatever we want. And actually, there was a moment back in 2016 when that changed. I think that's quite ironic that it was achieved under Trump, who was seen as lax on sanctions and other things. He put so much pressure on China not to buy Iranian oil. At some point, Iranian oil exports have completely dropped. They've really reached zero. So since then, probably due to various things, including probably the current US, as analysts put it, the current US administration unwillingness to have a further rally in gasoline prices, sanctions have softened. As a result, and this is our calculation, this is what Reuters has been able to do based on China customs data. They've saved it. Well, if you take those volumes they bought from Russia, Iran, and Venezuela all together this year, they've saved $10 billion as opposed to a normal customer. That's quite a lot of money. So but that has been kind of predicted, and actually they're hedging their risk quite heavily. No state Chinese companies buying Russian oil. It's only small teapots. They're not small teapots. We call them teapots. Actually, these are huge refineries. They're just independent. They're not run by Chinese state majors, which have assets in various parts of the world and could be exposed to various US sanctions. These are smaller companies which don't have assets abroad, which don't care essentially. They can buy this oil and benefit from lower prices. The big surprise, however, happened in India when India came to the rescue of Russian budget, essentially. This graph shows how much India was buying from OPEC before and how much it bought from the former Soviet Union. So the share has massively risen while the supplies from OPEC have dropped immensely, breaking with a very long tradition. And today the Russian oil constitutes about 40% of Indian oil imports. That's a lot. That's a lot. Essentially, against all expectations, India has become the biggest buyer of Russian oil. And How long it's going to continue is, of course, an issue of to what extent the US administration might be willing to put more pressure on India to stop it. So that's a pretty significant issue. What is this graph is all about? I've forgotten now. Yeah, here we go. So the funny thing that happened meanwhile is, of course, because there are the way sanctions are designed, and that sort of shows the complexity of the sanctions, is that in the past, say, 20, 30 years, the world of energy and energy refining in particular has changed, because Europe is keen to make the continent greener. Europe in particular, and to a certain extent the United States, they've outsourced big polluting refineries elsewhere. So in the past 20, 30 years, the Middle East and India have built huge refining complexes, and Turkey as well. So what happens that is a lot of Russian oil is now flowing to those countries, is being refined there, is being shipped back to Europe, and sometimes even the United States, under the label of, oh, that's Turkish diesel, or that's Indian diesel. In fact, if it's being produced from Russian oil, I mean, the jury is out whose diesel that is. Well, as a result, we have pictures like this near Westminster when people are protesting against Russian jet fuel powering Putin planes, etc. I thought that's a picture I think was taken by our photographers. So what we've seen is that India, China, Turkey have flooded Europe with fuel oil, and those countries keep ramping up Russian oil processing. One thing that became particularly interesting and unusual in this round of sanctions. Usually sanction, like you impose sanction, you don't allow somebody to buy, like with Iran. What did the United States do, and then what did the European Union do later? How they approach the Iranian oil. It's forbidden to buy Iranian oil, and in terms of US sanctions, if you sell Iranian, even if you buy Iranian, there's wherever you are in the supply chain, you are at risk of being punished by sanction. With Russian oil, it's slightly different. So Western buyers are not allowed to refine it, to buy it. No one is prohibiting China, and no one is prohibiting India from buying it. Now, the interesting part came when, for the first time ever, the United States tried the so-called Russian oil price cap, which was meant to design to limit Russian access to the Western shipping industry. Russia is short of tankers. It produces a lot of oil, but it's short of tankers, and it's short of tanking services, such as like when you ship oil, you need insurance, and you need basically the Lloyd's, the so-called Lloyd's Club. So they've established this price cap to say to the buyers, if you want to use the shipping fleet, you can buy Russian oil, but only if you pay below the price cap. The idea was the Russian budget gets less money, but oil keeps flowing to the global market, so it's not very disruptive. But as a result, but the funny thing, this price cap has completely failed, according to many people who follow the market, including Adi Imsirovich, who works for the Center of Global Strategic and International Studies, and formerly he's the chief trader at Russian Gazprom Neft. So I mean, he knows a few things about the oil business, and I mean, he published recently a very good report. That's the price cap. So the outright price of oil and the Russian supposedly cap prices, they don't differ at all. The reason is Russia has bought hundreds of tankers in the market and doesn't need Western shipping services anymore. Very often the idea about how much you pay for oil is obscured through crazy paperwork when people exchange different letters and say, well, yeah, I've paid below 60, I've paid below 60, I've paid below 60, and it turns out that everyone paid much more. And one more reason, I mean, Washington has made it very clear. They are not willing to impose secondary sanctions. and they want to stick to the price cap for two purposes. One, to, as they say, to limit revenues to the Kremlin, but second is to avoid another price rally and essentially a spike in gasoline prices in the US ahead of the election. So yeah, we've published the Funny Insight last year. I mean, we've done an investigation on these tankers, how those things unfolded. Russia was really short of tankers at some point, and the oil price sort of spiked. And then we were talking to a few traders, and they said, "I've noticed there's a couple of funny tankers. There were these Norwegian tankers which were transporting Russian oil for donkey's years, 5-10 years non-stop. They were called Kraken and Braken. I mean, whatever is the name of the Norwegian tanker. And they've been doing this for many years. And then the names changed. They're now called Peter 1 and John 2 or whatever. I mean, tankers change name all the time, but they're doing the same operation all the time, all still Russian oil. But now they're registered in the UAE. We called the company in the UAE, no one answered the phone. We called the Norwegian company and said, "Hey guys, well, what happened to your tankers?" They said, "Oh, we sold them." I said, "Who did you sell them to?" "Oh, we sold them to a reputable UAE company." And I said, "Well, but they're still shipping Russian oil." "Oh, but we didn't check. I mean, we sold it to the UAE company, and that was it." So this is how things are happening. So there was some question how the tankers changed hands and the KYC, etc. But I mean, it is what it is. So Russia acquired tens and tens of tankers and has become essentially self-reliant to a large extent. I mean, the big question at the moment whether the Greeks will continue shipping Russian oil. There's a number of companies which have carried on shipping Russian oil. Whether those tankers change hands or whether they carry on doing this and take themselves completely out of the market, it's not clear. So as a result, this is a pretty extraordinary figure. Russian government revenues from oil rose 24% in September, year on year, according to the IEA. So, I mean, that's to the question whether the idea of limiting revenues to the Kremlin is currently working. I think the jury is still out. Now, the predictions in the long-term forecast have become a bit of a classified data, so people juggle a lot of things, such as like finance ministry, budget forecast, etc. At the moment, it's still not clear, but even Russian own predictions based on various things, they see the oil output actually being stable, not suffering. The gas and LNG industry is the one which really suffers, and I want to speak about this a little bit later. So what happened to oil? We've seen that oil is doing pretty well on the Russian side. The sanctions have not had a major impact. The industry is adapting. With the gas is a completely different story. And why? The answer is very simple. Is an incredible rise in US shale gas output, which exceeded, people talk a lot about the US shale output, but actually in terms of US gas industry, it has outperformed the most wild expectations, essentially, in the past few years. And to put it in context, when Gazprom was in charge of the global gas industry and really was bragging about being the biggest company in the world, it never produced more than 500 BCM, billion cubic meters per year. Today, the United States produces 1 trillion, double of what Gazprom is producing, and there's no end in sight, because the U.S. government forecasts say they will be producing 1.2 trillion billion cubic meters in a few years' time. How it is compatible with the green targets, I don't know, but that's the reality. So the U.S. gas really helped replace Russian volumes in Europe. It was a major crisis last year when the war started, and the U.S. volumes came to the rescue to save the Russian oil industry. To save the European from a much worse crisis. 80 billion cubic meters of U.S. gas, which is how many? 800. Sorry, here I might be wrong, and I might be telling stupid things, but if memory serves me well, it will probably be around 800 huge gas tankers have come to Europe, supplying American gas here, and that really helped address an immense shortage, replacing probably 2/3 of what Russia was supplying. That was totally unexpected. As a result, this is what's happening with Gazprom. With Gazprom, I think in terms of EBITDA is basically your profit, but in a slightly more convoluted terms. It's earning before interest, tax, depreciation, and amortization. But essentially, it's what you take home is your pay, and free FCF is free cash flow. It's what stays in your pocket after you've spent already everything. So I mean, you bought your I don't know, you bought your grocery, you paid your tax, you paid your mortgage, and here is a bit of a cash that you saved for your holiday. This is what free cash flow is. Free cash flow really tells you how good is the temperature inside the company, how good is its financial situation. Gazprom is in a very difficult financial situation. All of this is in trillions of rubles. We've got to remember that the ruble was devalued. So Gazprom lost essentially its cash cow, which was Europe. So that's. Meanwhile, Russia is thinking that maybe it can push the liquefied natural gas industry up and somehow extract a gas that is still left in the ground. The issue with gas is that with the global energy transition, it becomes a very urgent issue to extract gas, because once and if the green energy really picks up, which hasn't happened yet, but it will ultimately, then all of the fossil fuel resources will be trapped. They will stay in the ground. There will be so-called stranded asset. And there's a race to extract this gas. I mean, the US is extracting its gas very quickly. Russia doesn't know what to do with this gas now, and it sits on the world's largest gas reserves after Iran. Iran is the second. So, and here's the story, what's happening in the global liquefied natural gas market. Everyone is in the race to do the same. And in the next few years, according to the IEA, there's going to be an absolute glut of gas in the market. People produce as if there's no tomorrow. No one wants to sit on gas and save it for future generations. That story doesn't exist anymore. Future generations will not want gas. They will want green hydrogen. They will want something else. So there's not much space for Russia here on the gas industry. So that's what the story is. And the IEA, again, I spoke about the IEA previously making an erroneous prediction about the Russian oil industry, but at the moment it does look like their prediction about gas is on the money, because they're saying that the Russian really share will halve. So in terms of Russian economy, if we look very quickly, and I have a few slides left and I'll be wrapping up. In terms of the Russian economy, yeah, people say it's one of our main kind of columnists at Reuters who I think came up with a very interesting headline that the economy is overheating on a powder keg. So the ruble has had a spectacular collapse, but unemployment is really falling. So yeah, you wonder why it is falling, because maybe people are being have to go. I don't know to what extent the army service is being counted here in the unemployment. I must say I don't know the answer. But the GDP, Russian GDP expanded by 2.2% this year. That's much better than anywhere in Europe. I mean, we've just seen a statistic from Germany. Europe's economy is really shrinking at the moment. Partially, it's because of the energy crisis, of the resources that were lost. Russian gas was cheap. Russian oil was convenient. Europe has to pay more than any other continent for its energy supplies at the moment. The IEA speaks a lot about how sort of the continent responded to the situation, and a lot of people mention this demand response, that Europe responded by cutting demand. But it's not like cutting demand when you are a big industry like Germany. It's not like you are coming back home and you decide to switch off your boiler for a few minutes so you can put two pairs of socks, etc. That means the economy is really suffering, and the main suffering came in the petrochemical industry, that it's in real decline because it became very, very expensive to produce anything, and it was in the agriculture as well because in fertilizers, because fertilizers need a lot of gas, and that became very difficult for Europe. But Europe is developing green sources of energy. Sorry, where did I go now? Europe is developing green sources of energy. The good news is that Europe will need less and less of fossil fuel. That's good news for Europe. So that's the IEA prediction. And that's looking quite good. With regards to Asia, Asia is the opposite. Asia is ramping up everything, and this is where potentially the good news for the Kremlin is, because they can continue selling their energy where demand seems to be increasing and where people care a little bit less, and some don't care at all about US sanctions. So in conclusions, I would say 20 months on where we are, the Kremlin's oil revenues rose despite the idea that sanctions will help reduce them. At the moment, that has not materialized. The Russian oil industry has adapted. The gas industry, as we've seen from the slide, is still in a very deep shock. And in terms of the economic impact, China, I had this slide about China saving $10 billion, but in the grand scheme of things, $10 billion is nothing. It's a very, very small amount. What's happening is that the US economy, thanks to cheap energy that they possess these days, thanks to the shale oil revolution, the economy is roaring. The latest stats they've published on unemployment, on PMI, on everything else, the economy is doing phenomenally well, and the EU is really limping at the moment. So that's my quick, not so quick, sorry, overview of where we are. I hope some of you found it useful. If I can answer any question, that would be great.